Hello and welcome to Business Arena, live from Warsaw on TVP World. I'm your host, Marie Cato. Let's go to the latest business stories of the day. Hungary and the Czech Republic are on track for further interest rate cuts this week in their efforts to strike a delicate balance between taming inflation and boosting economic growth. But one country in the region has taken a very different approach: Poland.
The interest rate cutting season is in full swing. In Hungary, the central bank is set to lower its base rate to 6.5% on Tuesday, continuing its aggressive cutting cycle. The Czech Republic is also expected to cut rates, bringing its key rate down to 4.25%. The two countries are slashing their rates to stimulate growth, with inflation in Hungary slightly above target, while Czech inflation is more in check at around 2%. Poland, however, stands apart. Since October 2023, it has kept rates steady, opting for caution over cuts amid concerns about persistent inflationary risks. Further cuts in the region aim to stimulate their recovering economies, with Hungary expected to take a longer pause after this week's cuts, while the Czech Republic may continue lowering rates to 3.75% by year's end. The differing strategies highlight how each country is navigating unique economic challenges. That's not going to be easy, taking into account sluggish recovery in the Eurozone, Central Europe's biggest trading partner. Recent PMI data shows a renewed decline in private sector activity, driven by weaker demand and falling new orders. The index for the Eurozone's manufacturing sector stood at 44.8 points in September, while for services it was 50.5 points. These are the lowest readings in 9 and 7 months, respectively. Business confidence is at a 10-month low, and manufacturing in the region is seeing its sharpest downturn in months.
As Central Europe is still struggling with flooding, local authorities are coming out with preliminary damage estimates. The good news is that major urban areas have been spared thanks to lessons learned in the late 20th century.
For almost 2 weeks, Poland has been struggling with the aftermath of severe flooding. According to data provided by the local authorities, the total losses caused by the floodwaters are already nearing €1 billion. Moreover, the early estimates do not take reports from the Silesian province into account yet, and the peak wave is still passing through the Lubusz and West Pomeranian provinces. The data already gathered shows that the most severe damage so far was recorded in the Lower Silesian province, where estimates are showing losses to the tune of almost €900 million. The Opole province suffered at least €91 million in damages, whereas Lesser Poland over €20 million. The numbers provided so far concern several thousand buildings. In total, the flood damaged over 10,000 residential buildings, over 5,000 non-residential buildings, and over 600 facilities such as schools, cultural centers, and churches. Additionally, over 100 bridges were damaged, and the Polish Ministry of Agriculture reported that 68,000 hectares of agricultural land were flooded, with crops grown on less than half of them. Nonetheless, there are many indications that the final balance of losses from this year's flood will be much lower than the costs caused by the flood of the millennium in 1997, which in today's prices would exceed €8 billion. This is primarily the result of building the Racibórz Dolny retention basin for nearly €500 million, which managed to contain the flood wave and prevented large cities like Wrocław or Opole from being inundated.
The EU has already allocated €10 billion in aid for the flooded regions, demonstrating that Brussels is able to react swiftly. But can the EU be quick to implement changes when it comes to its own internal operations and its future? To find out more, stay with us for The Bottom Line. Frostpunk 2, the newest release from Poland's burgeoning gaming industry, is enjoying strong sales. However, first impressions by gamers and official reviews are leaving investors anxious.
the fear of being mugged.
Gaming is a tricky business. Even if your game does well on the market, investors can still be disappointed. That's the case with Polish developer 11-Bit Studios, which released the post-apocalyptic city builder Frostpunk 2 late last week. Even though the game sold 350,000 copies, and according to the studio has already paid for itself, 11-Bit has had a hard day on the stock market. The value of the company's shares dropped by more than 30% on Monday to levels unseen since spring 2020. Investors were apparently put off by Frostpunk 2 less than stellar reviews compared to the studio's previous game. Frostpunk 1 shipped 5 million copies over 6 years of sales and was a smash hit.
Despite the ongoing war in Ukraine, the West and Russia remain heavily interconnected in the nuclear energy sector, a new report shows. But while some of the EU countries are aiming to end this reliance, others seek to maintain it.
Russia's nuclear sector is one of the few which has remained exempt from Western sanctions. According to the 2024 World Nuclear Industry Status Report, the country is involved in nearly half of all nuclear construction projects worldwide. The EU's efforts to sever ties with Russia in this area have stalled, largely due to some member states' strong reliance on Moscow, prompting them to veto moves to change the status quo. Russia's strongest EU ally, Hungary, maintains close ties with the country also on the nuclear front. Hungary's Soviet-built Pax nuclear plant is solely reliant on nuclear fuel deliveries from Russia's TVEL. This cooperation is set to further expand, with Russia providing financing in the form of loans, which will cover 80% of the planned Pax 2 plant. While Slovakia and the Czech Republic are working to find alternative nuclear fuel providers, last year they doubled imports of Russian uranium. 5 EU countries in total are currently operating 19 Russian-made reactors, making the halt of nuclear fuel imports costly and therefore even more complicated. Nuclear-dependent France is involved in several projects with Rosatom, as well as imports of nuclear fuel. German tech giant Siemens has also been involved in major projects with the Russian state-owned nuclear company. However, these relations have recently soured over the company failing to deliver components to the Rosatom-built Akuyu plant due to German export restrictions.
And that's all for our latest business news updates. For more of the latest business news stories, check out tvpworld.com.